Welcome back to the channel, everyone. This is going to be the third part and most likely the final part in this mini series on choosing the right supply and demand zones. And I know it's been a while since I made the last one, and I'm sorry about that. I've been very busy and I'm still quite busy, but I'm going to try and make more videos. Even though I'm busy, I'll just try and fit it in around the time that I have. And I have very recently hit 1,000 subscribers, which I never thought I would. So thank you so much for that. And if you're not already subscribed, then please do. But for everyone that is subscribed, thank you. It really means a lot, and it makes me feel good that I am helping people, which hopefully I am, which hopefully the fact that people are subscribing shows that I'm helping them. But yeah, thank you for that, and we can get straight into it. So the first two parts of this series were the most important, but this third part is going to be on imbalance, and it's something that just adds a bit more confluence to your trade. So if you don't have it, it's not the end of the world, but it does add confluence, and it will give you better setups that are more likely to play out. So it's definitely something to look out for. But first, I'll just kind of explain what imbalance is, and I mean, you kind of take it from the word. It's when there's an imbalance in price, there's an excess of buyers or sellers, which causes price to either shoot up or shoot down. So here, price shoots up. For over here, price shoots down. And this can be caused by news or just the market makers wanting to push price in one direction, and it leaves behind big candles and big imbalances in price that the market will likely come back to and fill, because there's an imbalance of buy orders and sell orders. But just to visualize the definition, if we look at this big bearish candle here, you can see before it, price is just kind of moving up a bit, a little bit of a range maybe, and then you get a huge candle, probably news. But as you can see, there was a huge imbalance, a lot more sellers than there were buyers, and so price pushed down without giving the opportunity for more people to sell and price to be filled at proper levels. So there's going to be a lot of resting orders within this zone all the way up to just the candle before it started dropping. The price will probably come back to and then fill those orders and come down again. But then the visual definition of imbalance is going to be from the low wick of the candle before the imbalance candle, so this one here, like that up, and then the candle after it, so this one here, the high of that, and everything in this range is the imbalance. And as you can see in this example, price pushed up, filled a bit of the imbalance, maybe there's a lot of orders resting here, push down again and create new lows. So that's something important to note. The price doesn't always have to come back up, fill all the imbalance. You might be looking to get in on from the supply zone, but price might not necessarily push up all the way to this supply zone and then take down. It could just fill the imbalance wherever the orders are resting in this area and then continue in this direction. And then it does eventually come up, and it does respect this supply zone a bit anyway. And it's actually still in it, but we'll see what happens. It did push down and then push up, and might go down again, or it might continue up. Price is bullish, so we could see it probably going up. But you might wonder, how do you know how far it's going to go into this zone? And the truth is that you don't. Some people like to place a 50% level and then sell there high above the high of the imbalance zone. And you can do that. You can create a strategy around that. I've talked about it in a previous video, but you have to gather data on that, see if it's profitable over the long run, so that you have confidence that you can take the same trade over and over again, and know that in the long run you will make a certain amount of percent every trade. And an example of where I use this, I sent this zone to the Discord ages ago. As I said, I haven't posted in a while, but I've still been a bit active in the Discord, so if you do have any issues or questions, just ask me on there. But I did send this zone, and the reason I chose it, first of all, looking back at the other parts, it took out liquidity here. You can see there was inducement here. That's this video calls part 1 and 2. And then there was imbalance. You can see here, after this demand zone candle was confirmed by the huge engulfing bullish candle, but it left behind this imbalance here. And some of it was filled, but there was still a little bit below this candle that wasn't filled, but it doesn't matter. The main thing is that the imbalance here in this candle shows that there were a lot of buy orders placed here, and that the market makers looking to go long. And then obviously it was also confirmed by this supply zone not being respected, and it got broken through, and price looked to go bullish, and then price came into our zone. You look for lower time for entries, or just get in from here and then back up to the high, and it played out very nicely. So that's a way you can use it in the actual market. When you've got your zone, you can use it as added confluence to just give you more confirmation and confidence that price is going to go in the direction that you think it will. As here, with this demand zone, the imbalance after it shows that in the future we're probably more likely to go bullish and bearish, and so there's a higher probability of a bullish trade playing out and this gives me confidence to take a long order in this zone, or as I said, wait for low time frame confirmation and then still getting long, targeting these highs. Now I'm going to go through a few more examples on USD JPY that I've used. One is here that I'm still waiting for. A lot of imbalance here, price pushes up loads, creating new highs, rejected this supply zone eventually, but this huge engulfing candle with the imbalance gave me confidence that price is going to go bullish, and there was a lot of buy orders placed somewhere in this zone, in this whole zone, but if it comes back here, then I can be confident that there's a high chance that it will go back up. And so that's something I'll be looking for. So this is on the daily time frame, but then also on the 4 hourly, there was some setups I saw, one of which I didn't take, but this demand zone here. It didn't take out liquidity, so I wasn't too confident in it. But as you can see, a lot of imbalance not filled, but created not only by the candle straight after, but also some of the subsequent candles after them. And what this does is it tells me, and should tell you, when you start seeing this in the future, that a lot of buy orders were placed somewhere in this zone to take price up, and an excess of buy orders is actually the key thing. So way more buy orders than sell orders were currently in the market resting. So there's still going to be some buy orders resting at some level around here for when price to come back and then take off again, which it has so far. And somebody looking into the future, this zone here, almost going into it, but as you can see, this huge bearish candle left a lot of imbalance. A lot of it has been filled, but some of it hasn't. We filled a tiny bit of it, then went down again, and now we're filling a lot more of it. But as I said, what this shows is a lot of sell orders were placed in either in this zone and specifically at the top where the move started. And so somewhere in this supply zone could be a good entry, or wait for lower time frame confirmation if that is something you want to do as well. But there's kind of the counter argument of us going along from here. But we'll have to just wait and see what happens. If you get two good setups in opposite directions, you might as well take them both, because the risk reward will play out. If one of them wins, one of them loses, you'll still be up a few percent with good risk management. So that's all for this video. There wasn't much to say. Just look out for imbalance. You should know what it is now, and it gives you added confluence, and hopefully you understand what it means about the market and how it means that a lot of orders were placed in that before that candle or in that candle as well, and it shows that the direction that the market makers and the institutions want to move the market in effectively. And it's just a way to give more confidence to your trades, give you some more confidence, because psychology is the main thing, and that's going to be the biggest downfall of most people, and it's why 90% of people who try and trade, it doesn't work out for them, because their psychology just isn't in the right place. So you really need confidence in your trades, and the more confidence that you can have with stuff like concepts like imbalance gives you more confidence to take the setup over and over again, even if it loses a few times in a row. But I do hope this video has been helpful, and hopefully the whole video course has been helpful. If you haven't seen the other two parts, definitely check them out. They're, in my opinion, more important than this one, but this one's still almost as important. But I hope you enjoyed this video, and if you've got any video suggestions, I've got a few, but if there's anything you want to see, leave a comment and I will add it to the list and get through them as quickly as possible while still trying to keep the quality good and good educational content. So thank you for watching, and I'll see you in the next one.